Markets are now officially opening in Europe, and we're just waiting, sitting tight to see what type of a trading session we're going to be looking at. And by and large, we're being indicated for some very, very large drops here in this morning's trade. The market was being called lower by approximately 10%, whether you're looking at the FTSE, whether you're looking at the CAC, whether you're looking at the Xetra DAX. All of these indicators had been pointing significantly lower. No surprise, given that the polls heading into this referendum had indicated that Britain might just etch out a stay results. That hasn't happened, though, as you've seen, and we're now looking at these trades just slowly filtering through here in this morning's session. The stock Europe 600 off by approximately 3% at the moment. As these stocks, they continue to open. It is the dawn of a new beginning, as we've been saying. A lot of investment banks putting out their notes this morning with regards to where they think sterling could be at the end of the year, and it's not looking pretty. I mean, a lot of them coming back and saying that that we should be looking at a drop of somewhere in the region of 10% with regards to this repositioning in sterling. Now, some of it have been priced in, and many of you also saying, when is it going to be a buying opportunity to get back into the pound? We're still going to be alive. Business will continue. We just need to figure out how to get through the next couple of months or even years with regards to the uncertainty of how not only the EU will look, but also how Britain will look. So what we're seeing here is just the very early indications of FTSE trade. So stocks starting to trade lower, as seen here. Many stocks starting to trade on the downside. We've got just a handful of stocks hanging on slightly in positive territory. There's been speculation also about how some of the miners potentially could fare, given that you have been looking at a pop in gold in the overnight session. There's been this rally back into the safe haven trades. We've seen a real rally in sovereign debt, a real rally in the price of gold, for an example. But given that by and large all equities have been being called very much to the downside, miners might very well sit in that basket as well. This is also, of course, tied into what happens to global growth and with regards to the miners, how this might feed through into emerging markets, given that Britain is now stepping out of the EU. Let's just look at these early indicators. The Xetra DAX, that's from yesterday, so just disregard that. You're looking at the IBEX off by 7% already, 7.25% already. The FTSE MIB down just a smidgen as well. I'm doubting that's today's trade, so let's just let that settle. SMI off by 6.5% in Switzerland, 75.09. The FTSE 100. A lot of activity, one would assume, on the FTSE 100. So again, let traders take their positions and let all of that volume filter through, and we'll come back and we'll check in on that in a second. I just want to show you what's going on with regards to some of the banks out there. We saw significant trades to the downside in the banking sector overnight out of Hong Kong. You saw HSBC, for an example, off by 10% or so. Standard Chartered was being called down. It was off by 9% overnight as well in Hong Kong. Commerzbank and Deutsche Bank both being called lower by around 15% ahead of the open this morning. HSBC just opening down by approximately 5%, and we're just waiting for some of these others, the initial trades, to come through. As said, one would anticipate that the volumes this morning could be quite a bit larger than usual.